Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, thanks.
Garth, nice to have you back in studio after a week's break, but not so nice to have to talk about Billiton as one of the trades that you have open. You've got a long position in the stock, and I think you'll probably be quite frustrated by it at this point.
Yeah, very frustrated by it. It's just a grind. It's not really doing what we were wanting it to do. It hasn't triggered our stop loss yet, but it's not working for us at the moment. Let's have a look at it. The long-term graph of BHP Billiton is on the screen now, and just to show why I did this trade, among other things, the big thing that I liked about it was that there's this long-term uptrend that goes all the way back to 2009, and you can see how that trend line joins all the low points since 2009. And I felt that at that 280 Rand level there was quite strong support, and we did see a reversal up off that level. It was doing the right things. And it did actually rally. It started off looking good for us. It rallied up to about 304 Rand, and I thought, right, this is all working beautifully. But it's unfortunately taken a turn for the worse in the last couple of weeks, or last 2 weeks really. Last week, Friday, we had a bit of excitement following the announcement by the Chinese to lower interest rates, and we saw the stock up 6% on the day, and I thought, well, this looks great. But it's kind of given back a lot of those gains. Yeah. So I think that bounce that we saw last Friday was mainly driven by short covering, and now we started to see the share drifting back down again. I see it's trading at about 274 Rand at the moment. So, you know, our stop loss is 270 Rand here. It's very close to where we're currently trading. So I don't know what's going to happen here. Look, if it breaches that stop loss, we'll be out of this trade. It is disappointing, but let's see. You know, we're not out yet, but it's not doing the right things, and I'm quite frustrated actually because I typically want to look at stocks that have got good momentum on their side, and I think in this respect I dropped the ball here in that this stock actually hasn't got great upward momentum. It's down, and the 50-day moving average is pointing downwards.
I mean, and even if it doesn't breach your stop loss, if it hovers just above the 270 Rand level, would you actually exit the position anyway, or would you just not like to have to exit at a loss?
Well, I might, but also remember that we're kind of drawing to the end of this year's Traders Corner now, and I'm going to probably look to the end of November to actually wrap up this portfolio and then donate whatever profits we've made to charity. So if it doesn't get stopped out, we might actually end up closing it off anyway, just by virtue of the fact that we're going to close up the year's portfolio soon. Okay,
so Billiton is a frustrating trade to be in. What about the options structure? Are we now? Is it the same case that you're actually in the dead zone when nothing is happening?
Yeah, we've been in the dead zone with this thing now for a couple of weeks. Yeah, very briefly, for those that haven't seen it, this is a put spread option structure. Above 45,000 on the top 40, it costs us nothing, and below 45,000, it makes us money. But now what I did against this was I went and I actually bought a top 40 futures contract long at 45,200, using the option structure as a hedge. And you can see the payoff of that futures contract illustrated by the white dotted line. Now we're currently at about 45,350, or that's where we were at mark to market last night, which means that we're right there in that dead zone. We're up 1,500 Rand on this whole thing. We need the market to move either higher or lower. If it moves higher, then that futures position will make us money. If it moves lower, then this option structure starts to make money for us. So we want some volatility, one direction or the other. Sitting around here, 45,000, 45,500, that's actually the worst case scenario for us, unfortunately.
Okay, Garth, but we remain in it, and we'll see how this plays out.
Yeah, we remain in it, and we see. I mean, it's been a very interesting structure to hold. We've had it for a number of months, and we've seen some terrible times with it. We've seen some good times, and now we're kind of sitting in the dead zone. It is rather frustrating, to say the least.
Okay, well, let's then look at, it's not putting you off your game, Garth. You're not letting it get you down. And you're going to look at the Rand this week with the intention to enter a trade against the Rand.
Yes, that's right. We've actually done a trade this week, but I'm going to lay the background picture and show you what I'm seeing here. So what I've got on the screen now is a chart of the Rand dollar weekly. And this goes back all the way to 2008. And what you can see is that since 2011, the Rand has been steadily weakening since then. Now, technically, we've got quite an interesting area of overhead resistance here at 11 Rand 40. You can see that that was the peak that we saw in 2008, at the last previous power crisis in that whole situation, which was now 6 years ago. But now the 11 Rand 40, you can see, has been a level that we've tested on a number of occasions this year on our market. And this, to me, is actually looks to be forming an ascending triangle, and typically you'll find that these things will break to the upside, implying that we're looking for rand weakness here. So that's the first thing. The second thing is to then look at the euro dollar, because it's all very well to say we've got a weak rand, which we do, but also we're very much driven by the dollar, and particularly when we're looking at rand dollar, it's useful to have a look at the euro dollar exchange rate and see what's happening there. And what's evident here is that this, a downward trend on this graph implies dollar strength. In other words, a strong dollar against the euro. And technically, there's this huge area down here at 120 on dollar euro. And for my money, technically, there's no reason to think that it's not going there. I think we're going to see it down at 120 soon. And there are a couple of fundamental factors, too, that could well drive that. One of them being the potential for a Eurozone
stimulus package.
Yeah. And then, of course, you've got the two economies, the US economy being fairly strong and the Eurozone economy being fairly weak. So that talks to a stronger dollar against the euro. And that kind of also then plays back into the likelihood of a weaker rand.
Well, I mean, I interviewed a very interesting guy called David Bloom, the HSBC economist, South African guy.
He's one of our greatest exports out of South Africa. He's very clever, that guy.
And he was saying, you're getting sucked into a deflation vortex, he said. And, he's the one who said the dollar is at the start of a bull run, which he thinks we have no idea of we've not experienced yet, and so he thinks that it could appreciate in the region of about 20%, I think.
Yeah, very possible, and that's the thing. So if he's right, and that story turns out to be true, well, then it's also going to play into the hands of a weaker rand going forward.
Okay, so Garth, if you look at also the seasonality of the rand, and this is something that you did some interesting research on at the start of the year.
Yeah, that's right. Viewers who watch the show regularly will know we actually put a successful trade on, a short rand trade at the beginning of this year. And it was based on the fact that I've noticed there's a fairly reliable seasonal pattern in the rand during January. Now, obviously, we're not there yet, but January is approaching. And for that reason, we're going to look at this trade that I'm doing today with possibly a 2 or 3 month view. Okay. And we'll probably run it out into next year's show. So this now goes back and it shows you the seasonal movement in the rand during the month of January since 2004. So we've got 11 years worth of trade here. Now what's very interesting is notice those that I've now highlighted in red, those are the years when the rand has weakened during January. And it hasn't just weakened, it's weakened significantly during January, each of those years. The average move in January for those years has been a loss or a weakening in the rand by 6.5% for the month of January alone. And you can see there were only 2 years where the rand actually did strengthen in January, and it didn't strengthen significantly in those months. So it's quite an interesting seasonal factor that we're talking to here. And then lastly, well, before we get into the trade, just some positives and negatives looking at the rand. I mean, on the left-hand side there, you've got the negative influences. So we've got problems like a slow economy in South Africa. We've got a widening current account deficit. Ratings agencies are all watching us for a potential another downgrade. There's political turbulence, which you can attach weighting to that if you want to. It's always a bit of a funny one to work with. We've got weak commodity prices, which don't really help our exports very much. The strong US dollar, which we've talked about, and then the fact that the rand is technically weak, as I showed you in that chart.
And also Eskom. We are in the midst of another power crisis, and they've just come out with results today, and it looks like Medupi is not going to start when it ought to have started. We didn't really expect it to, but that's also going to keep pressure on the currency and the country in general. For sure, that's right. So if you're looking for positive catalysts for the rand, it's not actually that easy to find, but the two that do stand out for me is the one thing is that the weak oil price does potentially help to bolster the current account deficit slightly and stop the widening to the extent that we've seen. And then also the fact that inflation is slowing. That also potentially, you could argue, slightly positive for the rand. But it's difficult to find reasons to be positive on the rand. Quite honestly, if I look at this, I think the odds are heavily stacked against the rand. And if I then couple that with that technical outlook that we spoke about, and we're going to look at it again now, I think that there's a potential for this rand to break weaker in the month or the months ahead.
So we've got a chart of the rand dollar again here. Now this is a daily chart this time, and it goes back to the beginning of 2013. So we're looking at about 2 years worth of trade history here. What you can see is that we've got that steadily weakening trend in the rand, which I spoke about in the previous chart. And then we've got this big area of overhead resistance here at 11 Rand 40. Now this is forming an ascending triangle. And typically these things are continuation patterns. They will invariably break in the direction of the prevailing trend. And in this case, the trend is for rand weakness. So what I'm saying is that we're looking for a break through 11 Rand 40 here. And I think that would be quite a powerful break, and you could actually see the rand getting a bit of a hiding if that were to happen from a technical perspective. If you take the height of that ascending triangle structure and then you project that distance up to give you a measured target, it talks to a potential target of about 12 Rand 50 for rand dollar. So it could get quite ugly if we start to break through that 11 Rand 40 level.
Okay, Garth, so you have entered a trade for the portfolio?
Yeah, so I've gone short on the rand dollar. I'm using a currency future here. I did this trade yesterday and I used a spot price of 10 Rand 99. Now because we're trading a March currency future here, there's 3 months worth of time value that we're paying for, actually 4 months worth of time value. So the price that I paid for that currency future was 11 Rand 20, and the difference there, the 21 cents difference, is accounted for by time value of money. My stop loss is 10 Rand 69 on the spot price. All right, I do it at this level because I can get a better risk to reward ratio now rather than trying to chase a break through 11 Rand 40 if and when we see that. So if I take you through the mechanics, I've gone short, as I said, 11 Rand 20 on the currency future, which is a spot price of 10 Rand 99. My stop loss is going to be 10 Rand 69 on the spot, which equates to about 10 Rand 90 on the currency future. My risk per dollar, therefore, is 30 cents. Right? I'm risking 2% of our capital here. We've got 350,000 Rand at our disposal right now, so 2% of that is 7,000 Rand. And if I take 7,000 Rand and I divide it by the 30 cents that we're willing to lose on a rand dollar conversion, it gives me $23,000 of exposure that I can effectively take. So these currency futures represent $1,000 of exposure each. So that, I'm rounding it off, I've done 23 contracts that I've shorted on the rand dollar here, and then my target, as I said, is 12 Rand 50 on the spot price.
Garth, and if you look at where you've set your stop loss, 10.69 on spot and 10.90 on the actual March contract, that's a fairly wide stop loss, isn't it? And any particular reason behind that level? It
is fairly wide. I just want to keep it a little bit out of the way so that we don't get caught out by any near-term fluctuations and volatility in the exchange rate. So that's the reason for putting it a little bit out of the way.
And just 12.50 the spot and the closeout there being March. So you're happy to enter a trade where the time frame of the trade is quite wide?
It is fairly wide, and the thing is that there's also potential that I could maybe add to this trade, and it depends how things trade during the month of December. As I said, this is a trade that I'm going to look to probably exclude from this year's portfolio and actually put it into next year's portfolio, purely based on the fact that I want to run it over the end of this year and into next year.
Yeah, which is not something that we've done before, although what we did this year was not close out our positions quarterly, which is what we did, and it has actually had, I think, a positive impact on the portfolio. So Garth, what is it looking like at the moment, given that we're in the dead zone with the put option structure and that BHP Billiton is being as frustrating as it has?
Yeah, well, we're slightly off from where we were before I went on holiday. We've still got 351,000 Rand in our portfolio. That's still up 40% for the year to date. But as you can see, we're losing a bit of money on BHP Billiton there, and then this option structure making us a small mark-to-market profit of 1,500 Rand. And then we've got this rand dollar March 2015 contract that we've entered into today, which we'll be holding over the new year.
Yeah, and Garth, no more courses, because your last one was what, 2 weeks ago?
Yeah, it was just before I went on holiday, so no more courses for this year. I will reschedule a whole bunch of courses for the beginning of next year, when everybody comes back recharged, including myself.
And just a last comment, do you think, what's your sense? Do you think there is going to be more of a push, a sort of a Christmas rally this year, or do you think we could well hover around in the kind of dead zone that we've experienced over the last day or so?
Well, there's always lots of talk of a Christmas rally or Santa Claus rally, and there's a potential for that this year. I kind of think after that significant correction that we had during October, we've now bounced, and it does kind of look as if we might be setting up for a bit of a push into the end of the year.
Okay, Garth, we'll leave it there. Thanks as always for joining us. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.